Happy Friday, traders. It's 8 a.m. Chicago time, 9 a.m. Eastern on Friday, the 9th of August, 2019. This is the Trader Bite episode number 1571. Thanks for joining today. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the markets are a little bit off on the indices, mainly driven by news right after the close yesterday. The news item was that it had to do with China. Um, the news was that the U.S. administration was going to uh, hold off on some of. It says trade woes linger. White House said to be holding off on a decision about licenses for U.S. companies to restart with Huawei in response to China's halting agricultural purchases. China's agricultural purchase halt was explained by them as the market in the U.S. is non-competitive versus other sources in the on the planet, and so they're buying their grains elsewhere. There's also stuff going on in Italy. There's some political turmoil there. As the League Party seeks fresh elections, Italian bonds, the BTP jumped by 20 basis points. And that's the main news, though. The gap down on the reopen was mainly due to the fact that the U.S. is still wrestling with the old dragon. Um, yeah. So that's that. We're looking at the DAX being off 83 and a half points. It's the laggard today. Several earnings releases and so on have caused that. The DAX is trading at 11,712 or 713 euros, or down 0.7%. The Nasdaq follows off by almost 50 points or 0.64%. The Euro stocks after that down 19 points. The leader today is again crude oil up 65 cents, trading at 53.19 on the September, and the bonds are up 14 ticks. Bonds are up 14 ticks. The yen is up, the Bund is up, the euro's up, and the 10 years are up. So clearly today, allocation is to safety as we come into today's trade. The S&P is trading right on top of its overnight point of control. Overnight point of control, and we're holding steady right in the middle or in the fat part of yesterday's profile. That's where we stand. Taking a look at the calendar today, we did get a lot of releases overnight. One second. Let's see. One of these releases was China inflation came in a little bit higher, 2.8%, 2 points versus 2.7. The Australian RBA released its monetary policy statement, and then of course Germany came in with a series of numbers, GDP out of Great Britain, um, and a bunch of other releases. In terms of what's ahead on the calendar, though, we're pretty much done for the session. PPI came in from the U.S. In line at zero point 0.2 month on month, and the rest of the calendar items are just done. So really, it's really surprise announcements from now going forward. Where everything that's scheduled has been done. Let's take a look at yesterday's expectations versus what we got. So given the way the market was opening yesterday, the way the market was situated over the last 3 days, you can see the last 3 days right here. This is RTH only or pit session only. The last 3 days have overlapped each other, and then we were gapping up a little bit. The key expectation is that we are likely to continue lower as we've gapped down and pushed up and gapped up and pushed sideways and so on, we're likely to test one more time this composite, this microcomposite formed by these 3 days, and we're likely to hold steady in the middle of that composite somewhere in the 2854 area. The secondary hypothesis, which ended up playing out, the secondary scenario, which ended up playing out a little bit better, is that we may push back towards the prior day's range, uh, bounce off or hold steady up above 2886. And if so, then I'm looking for it to turn up above 2900, push to 2915, 15 linger, continue on to 22, and then if we do play out scenario 2, I had mentioned that 2930 becomes the big target above. And what yesterday did was just do all of that, do it all in one day. We had really a very wide range, in consideration of the prior day's close. The ES really pushed a lot higher. Close to close, the ES, close to close on the ES, we had 60 and a half points higher. It's very, very unusual. The action yesterday was definitely impulsive, trend day up, on the way up. I want to show you something here that is just I thought it'd be interesting for traders to see, because I know there's a lot of content out there, and I know people are enticed to always sound like they are right. But up to this point yesterday, what we had, so we were trading around the 2900 century figure, okay? And what we had yesterday is this open that is an open auction out of range, and it's an open auction because it traded the swing high, traded the swing low, and it pushed right through the open, which is these green dots, to test the other side, and up and down, up and down, up and down, and we ended up putting in a wider swing here. And I use that as the opening swing. It's approximately 3-4 minutes in. And so the opening swing is right here outlined by these blue lines. Okay, that has to do with where's the early on, what is the widest or most aggressive swing high and swing low? Where did the selling get cut off? Where did the buying get cut off? And that defines our opening swing. It's not defined by time. But we stay within the opening swing for quite some time here, given that we have a gap open. And then what happens is, we have a pretty good rotation down, strong rotation down. We have an opposing rotation up, almost by the same size, 4.5 down, 5 up. Okay, and then it holds the mid. It's not quite an impulse yet. Holds the mid. And it looks like it may continue. It does not. It falls, and it's noise basically. So there's not much to do. Now, watch what happens here. Watch the rotations down here. As this thing drops, we see that we're getting an extraordinary rotation down, and we start to pull back. Here, all I can do is see that, look, the sellers are really muscling in. Delta's falling. We have our largest rotation of the day down. We are moving towards the prior day's high, which was 28.9150, and on an impulse. So what's the trade here? The trade here is to trade against the OS low, against the mid, with a lot to back us up. There's plenty here. There's a big profile, big fat belly here. It's kind of early still to lean on the profile, but we see there's a lot of volume here. So that's the trade to look for. I'm going to look for market to pull back, and we're looking for a continuation down, and that would be scenario 1. right? So that would be scenario one. So this is the ideal situation for scenario one to fall back into the range, push into 2880, 2878, and then work its way ultimately into 2854, right? So we have the market has spoken. You know, when they say, wait for the market to come to you, wait for the market to set up, wait for the market to set up. This is the market setting up. It's telling you something has happened. I have no interest or no tools or no knowledge, not enough experience, even after 19 years of trading, to predict that this is going to happen. I just don't have it. Okay. And that's okay. I don't need to participate in the first move. I need to participate in the second move. The second move, however, so looking short, this is a perfect short, right? Look short, 3.5 point, 4 point stop, puts us on the other side of the OS and stop out, full stop. And all of a sudden, what we have is this impulse down is completely reversed to the other side with an even higher impulse up on even higher delta participation. Boom. Now we're looking for longs. And this is a stop out. This is a bona fide stop out. And those who took this impulse down mid pullback trade looking for scenario one and got stopped, I got several comments on that. You know, it's like, oh man, why didn't that work? It's just one trade. The setup was there. We took the setup. It didn't work. It just didn't work. You don't have to change your trading plan. You don't need to eliminate that setup. You don't need to change anything. It's just one trade and it didn't work. It had all the pieces and it didn't work. Now we've got a higher impulse to the upside and the market has spoken yet again. The buyers have stepped in and said, we're not going into the prior day's range. That's about as far as you're going to get. Look to buy, right? And then as the market started to rotate, the only buy opportunity presented was this OS high at 2902, which I wasn't a part of, and then off to the races we go on scenario two towards 2915. The IB's put in, and we start to work towards 2915. And this is the first opportunity to actually find a trade. And in this case, it is a counter trend trade looking for a short in the 2915 quarter area for rotation 2909. And you can see here that the market just was not playing along. One scale out and scratch. Here, there's not much to do other than to look for longs, and the market just continues to run. The buying was relentless yesterday. There were several signals to the short side, but really, once we got that impulse long, any short becomes a scalp. And the only one that worked well is right up here against that 2930 area for a 4 point stop, looking for 2650 and a push into 2022 and a potential rotation down to 1715 to test this area down here at some point, which never happened. So there, it was able to give a rotation, two scale outs on the short side right there, and then it bounced back up off of the 22 zone and continued to push higher into the close. There's the test of the 22 zone, and it pushed higher into the close, and it got to the 30 level that I had talked about, and it even exceeded it. So it tested this 30 area multiple times before it finally squeezed. Yesterday was just really a short squeeze on and on and on and on. And so that's, very, very interesting day. It is a classic trend day, not my favorite. It would have been nice to be able to find or be aggressive. I just don't have an aggressive breakout setup. And so I stick with what I know. I stick with what works for me instead of trying to experience FOMO or to catch something just for the sake of catching it. Now that takes us into the overnight. The overnight, you could see the gap down. The overnight came in, and we had our point of control near highs with a very blunt high on a trend day up, with the market closing on the high print. The market closed on the high print yesterday. at 44 at 40.50, and then on the reopen. So we expect it, if it closes on the high print on volume, we expect it to continue to run a little bit higher. And what happened is it reopened between excuse me one second. It reopened at 3:30 Central, 4:30 Eastern, popped up one tick, went sideways. It closed at 4 Central, 5 Eastern, and then when it reopened at 5 Central, 6 Eastern, the China news had kicked in, and we had this gap down, a gap of about 10 points or so. And then sellers came in and brought it down right into that 15 zone that we were talking about just a minute ago. And then from there, the market recovered a little bit, but mostly just went sideways. And so what we end up with is a bit of a funky looking B-shaped profile, a B-shaped profile, and the inability to actually push back to the high. The market's been sitting underneath this mid throughout the session and is looking relatively weak versus the close, but let's not lose ourselves in the minutia here and understand that we are still trading right up against yesterday's point of control, the most traded price in the area in that 29.30 zone that I talked about. Um, and so to me, it just seems like, yeah, okay, we're trading below mid and we're away from the high and stuff, but still, compared to yesterday, we're still holding on to much of what the work that was done in the trend. So let's not get too bearish this morning as we come in. So let's move on to what's expected for today. I want to remind you that it is Like Friday. We do this once a week. Take a moment to find the like button today on YouTube and hit it, please. It does help others find the channel. So take a moment to just hit the like button today before you leave at any point. What do we have today? Well, well, well. We are inside of Friday's range. So Friday is the template day for today, last Friday. And so we've filled the gap that was below us. We have a small gap we've left behind of about 4 ticks yesterday, and we are holding steady against the point of control. I'm actually expecting that today is likely to be a relatively tame day. I'm expecting volatility to continue to drop. I'm looking for an open auction in range on top of the point of control. I'm looking for a small test to the downside, but then I'm looking for the market to push up through this 33 quarter area and to begin to drift up to take out this weak high up into 45-ish, 46, and then fall back off. There's a fair amount of risk coming into the weekend with still this trade rhetoric and these maneuvers by the U.S. and China. So I would expect the market to come off a little bit, for risk to be off a little bit on the close. But overall, we have to stick with what the trend shows as long as we're holding this key low volume node right here, which I expect to be tested this morning. I'm looking for it to continue and take out this weak high. Okay, the secondary, again, open auction, pushes higher into 35 or so, and then moves down, tests this key low volume node, and then holds steady, comes back into the point of control and holds steady in here and sits sideways. Again, nothing on the calendar, not expecting too much. And as long as we are holding above this 2900, 2909, 2910 area, there's really no excuse for the market. There's really no excuse for the market not to head back up to 2955, the next naked point of control, the next balance area above. So to me, the trend is your friend. The trend is to the upside. We've clearly got one-time framing happening on the daily to the upside, and so that's why scenario one is looking for that high to break. Not going to be very aggressive today. I was a little too aggressive on the short side yesterday with the scalps, but just could not or didn't successfully find a good long to trade off of. Also just felt out of touch with the market, having been off Monday, Tuesday, Wednesday. But overall, just not too bad a day, not a great day. There was definitely a lot of opportunity yesterday to get long at some point. Just didn't do it. Let's take a look real quick at how the order flow looks. So when I zoom out and look at the entire session here, let it load. So here it is. We've got the reopen, and then we have this gap down, market tests below. There was actually some liquidity at that low that kind of got hit a little bit. And then since then, it's just been sideways and it's been sloping down. It's been sloping down into the current trade, and we're looking at some pretty temporary liquidity at 29.30 above, and then 29.16 below. Remember that 15 to 17 area? It's got it's already got liquidity in it sitting there. So this is again that's one of the areas of interest as the market starts to trade. It's got a stock zone in it, so you can see my stock zones are stacked right here. So I'm looking to engage in that area on the first test. Other than that, looking farther out, just zooming out, there's long-term liquidity up at 45, 29.45, been sitting there a while. But down below, we don't really have much until we get into the 2900 again. So you can see 2900 to 2901's got some long-term liquidity there as well. And that's how things are shaping up this morning. All right. Good luck today. Catch you tomorrow, and I'll catch you on Monday. And remember, it's the weekend, so take it easy. Let's not get too aggressive, and watch out for news. If you're a Convergent member, you have the free Trade the News feed. It is just not wise not to turn that on and have it running. You don't have to respond to every news item that's being read, but it's important to hear what the news is, and base your decisions on that. I mean, it's a free feed that's included in your membership, so why not turn it on? It's worth 185 bucks a month, and you're not using it. So suggest you turn it on. Just keep it on because that's what's surprising the market. Good luck.